Hey all, welcome to ShareTreck. This is Raj here. Friends, today I'm going to talk to you about Editas Medicine because I am attracted by the fact that the share price has dropped from a peak of $71 by almost 92% to somewhere in the mid $5 range. So that's the first attraction. Second thing is there are some new developments that have happened that make me feel that probably it's time to take a serious look at Editas Medicine. So with that said, let's get started. Welcome back, friends. Editas Medicine, once a high-flying biotechnology company with shares peaking at $71, has faced a significant decline with its stock trading at around $5.72 as of yesterday, that is 25th of July 2024. However, despite this almost 92% drop, the recent developments hint at potential turnaround, although not without inherent risks. So I'm going to share my personal opinion with you. Please do not consider this to be a financial advice. This is just personal opinion. Do your own due diligence before you get excited and invest in Editas. So the first development is a strategic addition. Veteran Chief Science Officer joins Editas. Linda Berkeley, who was CSO earlier in Biogen, with around 37 years of experience at Biogen. She brings a wealth of experience in biologics, small molecule, and gene therapy. Her decision to join Editas was driven by the transformative potential of gene editing and aligning her aspiration to work on curative technologies. This, I think, is a big move for Editas. They have bagged a really strong CSO. And Berkeley's extensive background in inflammatory diseases, autoimmune disorders, and neurological conditions provides Editas with a robust foundation to build upon. Her familiarity with the team, including CEO Gilmore O'Neill, further enhances the company's strategic direction, and O'Neill himself has a real rich history in gene and cell therapy, rare diseases, and neuromuscular diseases, making him a pivotal figure in Editas' ongoing evolution. Then we are looking at the challenge and opportunity in sickle cell disease, where Editas has had its share of challenges, particularly in the competitive field of SCD. Competitors like CRISPR Therapeutics and Vertex have surged ahead. Even Bluebird has got its own therapy for sickle cell disease by securing FDA approval for Casgevy and LifeGenia respectively. These approvals underscore the viability of gene editing, setting a high bar for Editas' lead asset, which is Renicel. Despite these hurdles, I think we should be optimistic about Renicel's potential because unlike its competitors, Renicel employs a unique mechanism by editing the gamma globin gene promoters to upregulate fetal hemoglobin, potentially offering a more robust treatment for anemia. This differentiation could allow Editas to carve out a niche in the sickle cell disease market even as a late entrant. That is my personal opinion. And that opinion is also shared by Burke. And that's what she mentioned in one of her recent interviews. And the positive early clinical data on SCD for Renicel is also very encouraging. Recent early clinical data on Renicel have shown promising results in a study involving 4 SCD patients and 1 beta thalassemia patients. Total hemoglobin levels normalized and fetal hemoglobin fractions significantly increased, maintaining these levels through follow-up periods of up to 10 months. These findings suggest that Renicel could effectively compete against established therapies like Exacel and which is Casgevy, and also the one from Bluebird Bio. Editas plans to accelerate its trials, aiming to dose 20 SCD patients by the end of the year. The company's goal is to compile comprehensive data to support future approval submissions, positioning Renicel as a formidable contender in the gene therapy landscape. So for a moment, just envision that we have Casgevy, we have got LifeGenia, and then we have got Renicel, all of them approved and in the market. Given the fact that Casgevy and LifeGenia have already conditioned the payee market and come up with terms of engagement for reimbursement and are also pioneering efforts with Medicare, I think that Editas is going to have less groundwork to do. And at that point of time, Renicel being a front runner, I think the games will change. Probably Bluebird Bio, in my opinion, will be the biggest loser when Renicel hits the market. And Casgevy and Renicel might be the leading therapies. This is my personal opinion, not financial advice. So please keep that in mind. And in terms of strategic vision and future prospects, I think under O'Neill's leadership, Editas has embarked on a three-pronged rebuilding strategy with Berkeley spearheading efforts to expand the in vivo pipeline. This approach includes pursuing functional upregulation strategies for genetically determined diseases, leveraging Editas' proprietary CRISPR technology, and recent preclinical studies have demonstrated the platform's capabilities, including lipid nanoparticle delivery and enhanced potency through guide modifications. Moreover, Editas achieved a significant legal victory in the ongoing CRISPR-Cas9 battle, securing a $100 million non-exclusive licensing agreement with Vertex. This deal underscores the value of Editas' intellectual property and opens up avenues for further partnerships. In conclusion, I would say that Editas is a company at a crossroads and it stands at a crucial juncture. While the company's stock has experienced a very steep decline, the appointment of a seasoned CSO, promising early clinical data on sickle cell disease, and a strategic focus on differentiation in the SCD market provide a foundation for potential recovery. However, risks remain and the company must navigate the competitive landscape carefully. As long as the interest rate regime is high, there are going to be risks. But come September, when the interest rate starts dropping, I'm expecting Editas to do extremely well. With a clear strategic vision and robust scientific leadership, Editas aims to regain its position as a leader in the gene editing space. The next few years will be pivotal as the company strives to translate its scientific potential into clinical and commercial success. And I think the enabling factor is going to be reducing interest rates and the pickup of risk appetite in the market. So with that said, let's quickly have a look at the TradingView platform and see how Editas is doing today and if we can see any technical clues. So here we are in the chart for Editas. Each of these candles is a one-day candle. Today Editas is up 4.13%. Let me see if there are any new news item out here. I don't see any new news that is going to be catalytic or any new news for today. So this is purely a sentiment move. And also, I'm thinking that we are trying to inch closer towards our cup and handle target of 744. So this is a welcome move. Right now, the price point for Editas has got support from 3 exponential moving averages, which is the 9-day, 20-day, and the 50-day. It's trying to overcome the 100-day and the 200-day exponential moving average, and it will also have to go over 6.11, which is a horizontal resistance. Momentum is looking pretty healthy to me. MACD is also bullish. All systems go for Editas to reach its cup and handle target at this point of time. And we have the earnings coming up on 31st of July with a EPS target of a loss of 70 cents per share and a revenue estimate of 4.779 million. If they do better than that, I think this shares should start galloping, at least in the short term. So things are looking good for Editas at this point of time. Next, let us look at the put call ratio to see what it says. So we got a put call volume ratio of 0.74 and a put call open interest ratio of 0.97. So it's not very bullish. It's about slightly bullish to neutral in my opinion. So nothing much to gain from looking at the put call ratio. And having said that, I think we are coming closer and closer to the time when we get the first set of rate cuts in September. And as we approach, I think we are going to see most of the genomic shares in a mild bull channel waiting for the actual rate cuts to happen. To a great extent, the rate cut has already been baked into many shares, but I'm not sure whether it is totally baked into genomics. But when I look at the overall trend for most of the genomic shares that we care, which we cover in our watch list, I'm starting to see a mild bullish trend, which means that it's getting baked in. So things are going to look better going forward. The long wait is almost over. So with that, I would like to end this video on Editas. I'm optimistic. I don't have any shares of Editas, but I wouldn't mind picking up a few hundreds here and there as and when the opportunity presents itself and I have cash. I would like to hear from you whether you have Editas in your portfolio. What are your thoughts? What do you think about my analysis? Please put your thoughts in the comment section, because I'm a regular retail investor like yourself and I like to hear from you and understand your sentiments on this issue. With that, my friends, I'd like to bring this video to an end. Before I go, request you to please press the like out there to help with the algorithms. And if you are not yet subscribed, please subscribe. And if possible, send our channel to a friend of yours and request them to subscribe so that we can go to the 20,000 level. And I promise I'll work hard to improve the quality of our programming. Thanks and have a great day. Bye for now.